Now children, after we know the receipt and payment account, the meaning of receipt and payment account and the types of accounts that are made for the non-profit organizations, we start preparing the receipt and payment account. I told you it's a real account, it's a T-shape account as we used to. This is a replacement of the cash book. This is just a record of the cash receipts and the cash payments. I told you it's a real account. Debit what comes in. So comes in means the receipts. We record all the receipts on this side and all the payments on this side, the credit side. Let us proceed with the debit balance first. The debit side records all the receipt. We start with the opening balance here. The opening balance of cash in hand and cash at bank. We record the opening balance of cash in hand, cash at bank, and make the total outside here in the main amount column. This is the debit side I am showing you. Then the capital receipts. We can classify all the receipts as two main categories, the capital receipts and the revenue receipts. As I told you, it does not it does not segregate the capital and the revenue. Both the receipts, even if it is you sell the furniture, it has to be shown. You sell a small amount of grocery, it has to be shown. You show anything, it has to be shown. So this is the receipt, wherever you receipt from, small or big, revenue, day to day, or one time sale, it has to be shown here. So taking the capital receipts first, two legacies. Debit side we record all they are always prefixed with two legacies, to sale of office furniture, to sale of sports equipments, to donation for special purposes. Remember, I am telling you donation for special purposes, that is building, prizes, etc. There will donation come for general purposes also. This is the donation for special purposes. Then to life membership fee. The life membership, a very common, a very frequently appearing. This you get in every most of the questions. Life membership fee is always there. Life membership fee means sometimes some members, they give a one-time fee, their membership fee. They give the life membership fee at one lump sum. That is life membership fee. Since it is coming to the organization, it is shown on the receipt side. Then comes to sale of investments, to endowment fund receipts. Endowment fund, I'll tell you, endowment fund means the funds that are created with the bequest or receipts of anything. That is endowment fund. To receipt on account of special funds. Special fund could be prize fund or tournament fund. So any such fund that is created will be shown here. To interest on specific fund investments. Interest on specific funds. Any specific, we have created any fund, and on that fund there is any interest that is getting received, that will come here to interest on the specific funds. Then we come on revenue receipts. Revenue means to entrance, that is recurring in nature. So all the recurring receipts, the first recurring amount is the entrance fee. The entrance fee, then subscription. I told you, as long as it is getting received this year, it will be shown here. Whether it is received for the previous year or for the running year or for the next year, as long as it is received, it will be shown on the debit side of the receipt and payment account. Then general donation. See, I told you this was specific donation, that is a capital receipt. Specific donations are capital receipts, one-time donation. You do not get this on recurring basis. Donations, these are not recurring basis. Somebody has donated for building, somebody has donated for some prize, some special prize. So that is not a very regular feature. So it is a specific donation. This is general donation, means if it is a charitable institution, people keep giving donations. So that donation will come here under the revenue receipts. Proceed from entertainment, any such fest created, any such function created, any fair created that is organized, and there are some any mela that has been organized, anything that has been organized for by the organization, and there is some income from that, there is proceed from that entertainment. it will come here. In that, proceed from entertainment, revenue receipt. So these type of things are common. So as long as these are happening on a regular basis, it will come on the debit side. Interest on or dividend on general investment. See, it is general investment. Here it was the special investment, sale of some investment. So as long as an interest on specific fund investment will come here under capital receipt, and in case it is a general investment, it will come here. Sale of old newspapers, waste papers, etc. That's also regular feature. So under revenue receipt. Miscellaneous receipt, anything that is not covered any under these receipts will come under miscellaneous receipt. And then in case the balancing figure comes this side, it will be called bank overdraft, because that shows more the excess of surplus of payments over the receipts. That is why the balancing figure is here. So that is bank overdraft. Now coming to the credit side, that means the payment side. Payments, again the capital payments, and we classify as capital, and the revenue payments, as long as payments are being made this year, they will, whether they relate to this year, next year or the running year, they will come here. The first capital payment, building construction, books purchased, sports equipment purchased, cost of leasehold and investment purchase, advance for purchase of building, government loans, anything government loans that are paid, buy furniture, then the recurring payments, prices paid, the recurring very recurring amount, recurring feature, entertainment expenses, entertainment receipts was taken here, and entertainment expenses will be taken here. Printing and stationery, newspaper, postage, doctor or secretary honorarium. Honorarium means you have invited somebody for a talk or some special session for the employees. That will be what you are paying to that secretary or doctor. That is called honorarium. It is an expense for the organization. So expense means it will come under the payments. Then expenses on special food or food to patients, that is only for hospitals. Insurance, rent, salaries, advertisement, audit fee, the tennis, these are for sports clubs, gardening, bar, purchases, all these are activities wherever you pay. So these are the recurring type of activities. So any recurring activity will be taken under revenue payments, non-recurring activity under capital payments, and the receipt and payment account is done. In case the receipts are more, the balancing figure will be surplus. In case the payments are more, the balancing figure will be shown here as the balance carried down, that is overdraft. Now coming to a question that shows a little example of receipt and payment account. From the following particulars taken from the cash book of health club, prepare receipt and payment account. You have to prepare the receipt and payment account. Here, this is, I don't think it is not bright enough. Now see here, this question, this is, I told you this is not the same textbook as yours, but a question well explained for the beginning of receipt and payment account. How do we make the receipt and payment account? Here we have been asked to make the receipt and payment account from the cash book of health club. Let us see the information given. The information given is cash in hand, cash at bank, subscription received, donations received, investment purchased, rent, then general expenses, postage and stationery, courier service, sundry expenses, closing cash in hand. All these expenses have been given here. The receipt and payment have been given here. This is how we make the receipt and payment account. We write on the top, it is important, receipt and health club. The name of the organization is very important to be mentioned here. The health club, receipt and payments account for the year ended. Remember, it is not as at. It is the replacement of the trading account, the cash book. So it is for a specific period. For the year ended, dash, 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 as given to you in the question. The debit side is the receipt side. All the receipts whatever receipts, the capital receipts or the revenue receipts, it will be better, it will be always preferred if you classify the capital and the revenue receipts. In case not, there is no hard and fast rule, there is no negative marking for that, unless the question demands that. We start always with the balance is given, the balance cash in hand and cash at bank. The balance is given, cash in hand rupees 5,000 here, cash at bank rupees 25,000. The cash at bank is given. Then the next receipt is the subscription. Always, this will usually it will be there, 90% chances this will be always there. So subscription receipt received is the very common receipt which will be usually there. And then the donations, the subscription received for the amount that is given, then the donations for the amount that have been given. Donations received rupees 35,000. Coming to the payment side, wherever we have paid, whatever is purchased is a payment. So by investments, by rent, by general expenses, by postage and stationery, courier charges, sundry expenses, balance carried down for both the, in case balancing figure is this side, it will be balance carried down. And this is the balancing figure by cash in hand, and by balance carried down, cash in hand and cash at bank. So that is, these are the closing balances which will be used later, which we'll do later. This is the receipt and payment account, the first example. I hope we are clear. Coming next, children, next we come to the next account, which is the replacement to the profit and loss account. This is the income and expenditure account. The previous account that we did, the receipt and payment account, was a summary of the cash book. This account, income and expenditure account, is the account that calculates the surplus or the deficit. So this is the replacement for the profit and loss account. Let us do the features. The first thing to understand that this is the nominal account. Nominal account means debit all expenses and incomes, or expenses and losses, and credit all incomes and gains. We all remember that. So nature is nominal. Then next is the basis of recording. Very important to understand that the items of only revenue nature are recorded here in this account, whereas the items of capital nature are ignored while preparing this account. Those items will be taken later in the balance sheet, will not be taken in this account. Then the purpose for this account is to calculate the surplus or the deficit. In case the incomes exceed, it is surplus. In case the expenses exceed, it is the deficit. Then it is similar to profit and loss account. Yes, it is very similar. It is paid in the same manner as the profit and loss account is prepared. So all the adjustments relating to the current year, depreciation, the prepaid expenses, outstanding expenses, accrued income, all those adjustments have to be given here, as we used to give in the P&L account. Next, opening and closing balance of cash. This account does not record the opening and closing balance of cash. It does not record the opening and closing balance of cash. The cash balance comes in the cash record, that is the receipt and payment account. And the last, only current period. A very, very important point to understand, that this is prepared only for the current period. That means the items of income and expenditure account pertain only to the previous years, that means it pertains only to the current year. So items of previous or the future years, they are ignored. They do not find place here. We have to take only the current accounting year items in this consideration in this account. So other all items are ignored. That is the income and expenditure account. And then after this,